wouldn't say that there's a particular type of development that offers, over the long term, offers better returns than the other. At certain times, all property is cyclical, no matter what property you look at, whether it's commercial, retail, industrial, residential, upmarket residential, middle-end residential, affordable residential, land, just land ownership. It's all cyclical. There are big factors that make properties rise and fall, interest rates being one of them, demand and supply. You'll have different times where different sectors within the property market are doing better than others. So they disconnect a bit. They don't all go up and all go down. At the moment, or historically, the last 5 years, the worst performing sector has been the commercial sector, office space. After COVID, people started working from home, moving away from the cities. So that was doing not well. Sales of housing units in CBDs, like apartments and things, were not doing well, with the exception, I think, of Cape Town, which is tourist driven. But people wanted more space. They moved away from the city. They could get better value for a house further out of the city. And now especially they didn't have to live close to work, so it made sense. Industrial or warehouse, specifically warehousing type of properties, have done very well because online, and it's not stopping. The online shopping and things where companies, instead of having so many retail outlets, they're selling online, so then they need warehouses to have their distribution from and their storage facilities. So that has done very well. But, retail has its ups and downs. Certain parts of the retail market do well, sometimes certain don't. The key to the question was long term. So in the long term, 10 years plus, property does fairly well. If I am, in the property market, we look at any type of development on a specific basis. So we're looking at the moment because we want to set up offices in Cape Town, specifically in the Claremont area. I was looking for offices to rent, and I really couldn't find anything that's suitable that I wanted, and I saw that there's lack of offices. Now that's quite counter to what I just said about the commercial or office market that's been in the doldrums for the last few years. But that's also, you see now, there's maybe an opportunity in that specific area. Not to say that offices everywhere are doing well or going to do well, but I think a lot of people are returning to work full time. So it might be a good time to invest in offices, but you don't need to go and develop them. You can go and buy shares in a company such as Redefine or Growth Point, or one of the listed funds that has a lot of exposure to offices and commercial, if that's what you want to do. But also, so I think there might be I'm still ahead of the market, but I think, it takes a year or 2 or 3 to develop something. So you want to try and be ahead of the market. It's hard to predict what the market will do, but it's demand and supply. So I think there's a bit of a lack of supply of good quality offices, fancy, nice, brand new stuff. But rural retail, the guys like McCormick Group, Moelman, Twin City, those guys have been dominating the rural retail market for many years, and they're still doing well. People in the rural areas are wanting to have retail opportunities closer to them. These guys are delivering on that. Instead of having to drive far to go to your local shopping center, they're bringing the shopping to the people. So that's been doing well, and I think it will continue to do well. We focus on the residential stuff for the affordable market. I want to go and build, or we are going to build from next year, apartments in areas in urban areas, so in cities, Joburg, Cape Town, places like Bloemfontein, Durban, and we want to roll out apartments that we want to rent to people that can't afford to buy, but we want to rent them out to guys that currently live in shacks. We believe we can do a private social housing type of development, and I don't like the word social housing, it's got negative connotations, but a private development with all the amenities, security, services, water, electricity, reliable water and electricity, social amenities, clubhouses, those type of things, creche. I don't think people need to live in shacks anymore. People are renting shacks. 60% of the shacks in South Africa are rented. Depending on which township you go to, prices range from 2,000 to 3,500 rand a month for a shack or a backyard room. And at those rates, we can provide them with a unit that, in a very nice development, with security, with everything I previously mentioned, that is dignified for those people to live in. So we're very excited about that. I think that market is massive, so we're excited. There's a lot of money to be made, but we can make money and do some good. and I think we're excited about that. But property in the long term tends to make money. And I wouldn't focus too much about short term. If you want to invest, investing is buying and holding for the long term. If you're buying something quickly and selling it, that's speculating. And that's similar to gambling. Because in the short term, I can't tell you how long it's going to take for the property market to change. In the long term, I do know that it's going to increase. It's driven by fundamentals of population growth, income growth, and those things are increasing in South Africa and in Africa as a whole, which we should be very thankful for. So long term, the property market's growing, and you can ride that long-term growth, but be patient and invest in property. Don't speculate with property. You always hear stories where guys have, I see it in Cape Town all the time now. People are in the Cape Town residential market, the upmarket stuff in the Atlantic seaboard, in the southern suburbs, and places like Val de Vie. People have made a lot of money overnight. They're not property developers. They bought a house. A year later, they got offered double, and they've made money. But that doesn't happen for the long term. There's a rule called reversion to the mean, which means over time, everything goes back to average. It hovers around average. In the short term, you have things that grow very quickly, and then there's a crash and it goes down. But in the long term, the average, it's very hard to not stick to the average returns. That's not just property, that's in most businesses, it's in the stock market and everything. So stick in it for the long term and protect your investment. There are opportunities in any sector of the property or any part of the property market, and it just depends on what you come across. You might have inside information in a certain area. You might know that, for instance, when Medupi and Kusile were being built, the power stations, the neighboring towns experienced a massive boom, and everybody climbed into property because there was lack of affordable accommodation, bed and breakfast, housing, all of that type of stuff. So you might know that something's coming or something is being built. There's a new mine that's being opened. There's a new factory that's going to employ a lot of people, and people want to live close to the site. So property values in that area might increase because of the demand and supply and balance. So it might be a good thing to invest. But be careful. A lot of people lost a lot of money on the things like Medupi and Kusile and investing in the property market there because it was a short-term. It wasn't short-term, but there was a construction period where there was a big demand for housing, and then that construction period ended. And now suddenly you've got a hell of a lot of houses sitting there with people moving away to other places again. So just be careful of that. But I always like to say, and I think it'll make the bankers scared. If you look around in South Africa, you don't drive around and see ghost cities. Most of the buildings in our country are occupied. They might not look pretty, they might look a bit dilapidated, but even the horrible abandoned buildings in Hillbrow are occupied. We're not sitting with empty buildings all over the place. So over time, people will occupy the buildings. Whether they do it, whether you are going to make a profit out of it, is whether you judge the market correctly, whether you are conservative and you don't overprice, you don't price yourself out the market, or you don't develop something that's too expensive for the market that you are trying to service. And also, how a lot of guys see their asses is developing too quickly, saying that I want to develop 500 apartments, but you actually can only sell or rent out 1,000, or sell or rent out 100 apartments in that area in a year. So you've got to make sure that you don't go too fast, especially using bank money, because bank money draws interest every month and you've got to service that interest. If you're using your own cash, you can be like the Chinese when they went and they saw the boom was coming and they went and developed those massive ghost cities that they call them. But I hear that those ghost cities get occupied. The Chinese were saying, well, we've got a lot of money and we know that the prices of materials and everything is going to go up in future. And we know that our population is growing, so we're going to need more housing. So they just went and built these things. But that's governments that do that. That's not us. But yeah, just stick to the fundamentals and you should be okay and have a long-term view.